Hello, trading is closed on April the 13th, 2017. My last call said that Wednesday's pattern was bullish and that unless it were invalidated by gapping down sharply and undercutting this low, higher prices and perhaps an all-day rally could print. Well, we gapped down, undercut the low promptly, so the call was killed before the open. During the day, MEJT gave a few signals. They all worked. That doesn't really give us any help for Monday when the market reopens. I have strong support at today's low. I'd like to go over what it is. And if this support holds, as I think it's very likely to, we could gap up sharply when Monday starts trading again. That doesn't mean we're not going to trade lower in the overnight sessions in the meantime. For one thing, we have a wall of selling into the close. That's indication of panic selling by the amateurs. You'll notice with not very much time left, 10 minutes, we didn't undercut the middle of the day low. Panic selling like this with a close right at the low of the day is indication of people willing to sell at any price. It's not the professionals who act like that. If you look at trading in the puts, you'll see it's kind of off the charts. We haven't had that many in months. Again, it's a sign of panic on the part of retail customers. I've relabeled my wave count. I now think that's A and that's B, and that a wave A of larger degree into the Fibonacci retracement of the last move up. This is a 65-minute chart. Here's your bar 13 for the DeMark sell signal. Here's your TDST line. Support extends to a bar beneath the line, which is where we are. If we trade lower at all in the overnight session, we'll have support from the MEJT ultimate target for March 27th. Remember, printing in the overnight session doesn't satisfy the target, but it's still relevant and provides support. Here's the daily chart. Starting from this TDST line, here's your bar 13 of the sequential sell signal. This is an important support level. Here's the high. You go back 61.8%, and within a few pennies, that's today's close. I had to give up on my old count, but I came up with this one. I have this as being A, and this as being B, and this as being C. If it is C, you can see some nice Fibonacci relationships, most important of which is this wave A and that wave C are related. There's also a relationship of this wave C to this wave A and this wave C to this wave A. If you want to see this last decline in greater detail, here it is. Here's your A. Here's your B. We had that before. Then we have A, B, C. Here's A. You take 61.8%. Bingo. Right on the nose. As negative as I've been for a long time, this decline from the all-time high has been overlapping. I don't think there's any way to count it as an impulsive drop. I don't think there's a way I could find to count it as a leading diagonal triangle, so it has to be an ABC of some kind. I think this is a very likely spot for C to end. If I'm correct, we will gap up sharply when the market reopens, even if we trade lower in the overnight session. If that does not happen, if instead we just keep on dropping, then this will fail, and it'll fail in all likelihood in grand style. So Monday's open is going to be critical. Trying to catch the dagger is always tough, but I'm going to try here and say that we gap up sharply Monday, and if I'm wrong, it's going to be clear before the market opens. And that's today's call.